Hey everybody, Brady here. I appreciate you joining me, and if you have not read the first blog post on this page, welcome. If you have read the first blog post on this page and you're joining us for the first video, welcome again. And I want to explain to you kind of what's going on real briefly. If you haven't read the first blog post, the purpose of this particular page is to help people that may have an interest in investing in the stock market but have a lot of fear about it because multiple reasons. They may have been raised that it's to believe that it's only for the super wealthy or the super smart, or that it's gambling. There's no and there are no guarantees, but there are no ways of trading to where you can pretty well know that you're going to make money. I'm going to try to squelch a lot of that. I know a lot of people do Robinhood videos and stash videos, and they're showing you different, and a lot of other companies that are out there, and they're showing you for the most part of what I've seen how to make money doing day trading on your Robinhood account. And that's not what this page is going to be about. We are going to do a lot of swing trading, but we're also going to do some long-term investing. And I want people to understand that it's not as hard as you may think it is. It's not for the super wealthy only. And just a regular, I'm a tow truck driver. That's what I do for a living. I don't have a college education. Yeah, I mean, anybody can do it. I feel like I'm an anybody. So anybody can do it if I can do it. So I just want to be an encouragement. I want you to understand that that's the main reason for this blog that I'm doing. I want to show you my different trades that I'm doing. I want to kind of explain to you the different kind of stocks that I'm in, and exchange traded funds that I'm actually using to build my account, little tiny baby steps at a time. Now, I took a lot of money out of this Robinhood account and I put it in other places because I want to use this account specifically to teach you, if you're hesitant to get involved, how easy it is to get involved, how simple it is to actually make a little bit of money in the stock market with long-term goals of making possibly building a good retirement account. So we're going to get started. I'm going to show you my account. And I want you to know that we're coming out of this, hopefully we're coming out of this COVID-19 pandemic. It's April the 29th, and this is where my account is in Robinhood currently. It's at roughly $2,500. It's moving up today. Here's the past week. It's been moving up substantially for the past week, up 6%, and that's nothing to snub your nose at. And I'm going to show you and kind of give you a brief explanation of the different stocks and ETFs that I'm trading. TQQQ. It is a triple leveraged ETF that tracks the QQQ, which tracks the NASDAQ 100. It is up 2.46%. PayPal. I think everybody knows what PayPal is. And I've only got a few shares of each one. Microsoft, I've got 3 shares of it. Pool, which is a company here in the state of Louisiana where I live. And I'll kind of show you they have really low volume on average, but I like how they look over the long term. Now, of course, over here to the left where it drops down dramatically, of course, that's the coronavirus, the coronavirus market. But you can see their recovery has been quite well. And this is the 5-year chart, and that's what is impressive to me. They have steady growth, and that's what I look for right now. Is for this particular page, I'm looking at stocks that have this kind of growth. Let's go back and look at Microsoft. 3 months, here's the coronavirus V, and then it really started coming up, and this is right about here at about I think it was like 154 is where I actually started trading it in different accounts that I have. Okay, and here's the 5-year chart. Look at that. It's almost smooth, straight up from, let's see, say about $46 up to, I think it was 185. Yeah, up to about 185. It's very smooth. Even the pullback of 2018, September 2018, it wasn't that drastic. But this is what I'm looking for. These are the kind of stocks that I look for to do this baby step trade with you. Okay, QQQ, it's similar to TQQQ, but it's not triple leveraged. It basically just tracks the NASDAQ. And I'm not giving all the explanations here. I'm just really trying to keep it simplified for you, because most people, if you're new, you have no idea what's going on anyway, and it's going to take you some time to get your feet wet. This is a get your feet wet account. I'm showing you how to get your feet wet. I'm not showing you high-tech, in-depth chart reading, fundamental reading, all that kind of stuff. I'm showing you very simple baby steps that you can take. You can graduate from here if you want to on your own, or you can stay right here. And if you're doing it for the long term and you enjoy the kind of swing trading that I like to do, this is really simple. You may have a time in your life when the market pulls back and you're caught up into, let's just say QQQ, and you have a 20% pullback in the market. You haven't lost anything. This is why it's not really gambling. Our stock market is designed to go up and recover from downturns. And right now, it has almost completely recovered from the COVID downturn in about 2 months, roughly 2 months. So when it does have a pullback, don't sell. My recommendation. I'm not an advisor. I'm not a financial counselor or anything like that. I don't have a college degree. I am a tow truck driver. So take it for what you want to take it as. I'm not telling you to buy or sell any kind of particular stock. I'm showing you what I do and what I do alone. And it's up to you whether or not you choose to make the decisions to do what I'm doing, or just use it as kind of a template for what, different stocks that you can find and do the same thing. Okay, moving right along. We're looking for about a 3% return. We're not day trading. These two stocks at the top, the TQQ and the PayPal, even the Microsoft, they may turn 3% today very easily. But if they do today, I'm not going to sell them. I'm going to let it ride overnight. That's what a swing trade is. I don't really do a lot of day trading. Okay, now let's move down into my long-term investments. Those are my short-term, I like to call them flippers, okay? Because I buy them one day and then I hold them for, a day. I either hold them overnight or I hold them for a couple of weeks until they make the return that I'm looking for. Because I'm just looking for baby steps to get to my next goal. Right now, my next goal is to have $3,000 in this account. By the way, I'm not adding any money to this account. I'm only using the money that the profits that I make and reinvesting those profits in other stocks. And again, like I said, we're going to move right along. We're going to get down into the ETFs. All of these, from the KBWY all the way down to the Angel, those are the ETFs that I am long-term holding. Some of the profits that I make on my flippers, some of the profits I'm putting into ETFs like KBWY. Every one of these long-term ETFs that I have, they pay dividends every single month. This one's paying right at 12%. You can see it under dividend yield in the right column at the bottom of it. It says dividend yield. It's paying almost 12% a month, every single month. Now that's for the annualized dividend. All right, you can learn all that kind of stuff on your own, but that's cash money. To me, it's kind of like free money. All right, and I know a lot of people will argue with that, but anyway, SPFF, it pays a 6% or 6.5% dividend yield each month. So all of these are dividend payers every month. And I take a little bit of the money from the flippers and I'll put in one of these, and I'll just let it ride. Just let it ride. All right, well, now we're going to go down to my watch list. These are other flippers. These are other stocks and ETFs that I like to buy, hold until they make my 3 to 5% profit, and then sell them, and then take that money and invest in something else. We got SPY. This is the stock or the ETF that the entire U.S. economy is generally based upon. Okay? It has a steady upward trend. Now, over here to the very right, you can see the coronavirus debacle. That's the best way I can describe it, because that's what it is. You can see, though, that the market is having a very healthy return, nearly a V-shaped return at this point. Okay? SPXL is an ETF. It's triple leveraged. It's a bull stock or a bull ETF, and you can see it almost looks just like the S&P 500. The difference is it's triple leveraged, so it makes you more money, a bigger percentage return quicker, but it also can lose it quicker, 3 times faster. All right, DIA, that's the Dow Jones Industrial Average ETF. Kind of a slow mover, but it's slow and steady. I'm going to go through each one of these charts. This is the 5-year chart. Looks good. Up 35% for 5 years. That's not bad for the Dow Jones Industrial Average. The Dow Jones, relatively safe. Okay, the SPY, relatively safe. The NASDAQ, this one here on the bottom, NDAQ, relatively safe. Okay, they're all designed to go up. All stocks are designed to go up. Okay, let's go through a couple more of these. You got Lowe's, Apple, Medtronic, NASDAQ, which we already mentioned, Visa, MasterCard, and Global Payments. Now, I like these 3 right now as a good flipper because of kind of a shift in the way the economy is going to be working from this point forward. It's going to be a lot more digital type stuff. See, Global Payments has a good upward trend. MasterCard, good, smooth upward trend. Visa is going to be pretty much the same, good, smooth upward trend. So as you can see, there are so many opportunities in this 5-year span. How many opportunities can you possibly count, being that it started at $68 5 years ago? How many opportunities between 5 years ago and today has there been to make a 5% return or a 3% return? Go back. I've got another post talking about compounding over time. I think it's the post right before this one. Go back and read it and look at what compounding can do over several years, over just a few years actually, and see if you see an opportunity with that and this. Okay, now that's all we're going to talk about today. I'll go back to the top. We're still at 2507. I will be making updates to this post or to this blog. And by the way, I'll post the link to the blog post so you can actually follow it there. I do a lot of things on this page that you may or may not, on this YouTube channel, that you may or may not want to follow. I do a lot of beekeeping. I do some Bible reading. I got some of my family stuff on here. It may not be something it's not just one thing. So I do everything on my blog website, and you can kind of follow along there. I'll be making updates hopefully every week, maybe even more frequently, depending on what the market's doing. But follow me on the blog post. Don't. I mean, if you're interested in beekeeping and all that other stuff, go for it. You can follow me here on YouTube. Otherwise, I would recommend just following the blog post. And I will post the link down in the comment section or down in the description. And I appreciate you being here. I hope this is helpful. If you want to sign up for Robinhood, I've got links on the blog post where you can sign up. There'll be a link down in the description of this video where you can sign up for it too. I also have a stash account that I will be teaching people how to trade, and I kind of like Stash a little bit better, but you can go to the blog post and you can see all about it. I gotta go. This video is going a little bit long. I love you. Have a good day. Be safe out there. Bye-bye.